Hey, very good day, ladies and gentlemen. You're watching me, Eugene Tail, Rock the Block Daily News on today, 5th of September. Now, you may be wondering where the hell am I? I'm right now in the backstage of a theater because this week I am helping out backstage with a show that's happening tomorrow onwards, all the way to the weekend. And I didn't want to miss out a daily news, so since I don't have time to record at a studio, I'm gonna do it backstage for you guys, okay? As always, this episode was brought to you by our friends over at OneChain, the world's first cross-chain solution for the financial infrastructure. First up on my headline news today is about Bitcoin ETF. And while the world has been really excited about Bitcoin ETF, saying that this is where the bear market would change to a bull market and everything is going to go sky high, I have my reservations. All along, I didn't think it was a good idea. It might be a good idea for the short term, but in the long run, this spells trouble for the blockchain and the Bitcoin community. Why? And this was actually very well articulated by Andreas Antonopoulos, author of Mastering Bitcoin. So he said it much better than I could explain it. So I'm going to take the points of what he said and give it to you line by line, so it's a lot clearer. So he's a renowned Bitcoin advocate that believes Bitcoin ETF is imminent. However, he shares that the long-term implication of such fund will do more harm than good. What's an ETF? ETF, Exchange Traded Fund, is a financial instrument that is created by a custodian or a fund manager. It's traded like a stock, but it's not really a stock. So in the case of Bitcoin ETF, what you get is a custodian who will buy all this Bitcoin, put into a pool, split it up into shares, and then sell it to you guys. The fund is then open for people to buy these shares as stocks through their stockbrokers that is eventually found on a stock exchange. But most importantly, this also means that these ETF holders, these investors, are not actually holding on to the actual Bitcoin. If you're not actually holding on to the actual Bitcoin, you don't own the Bitcoin, you don't have any voting rights, and it's definitely not decentralized. Who owns these Bitcoins? Well, these custodians or fund managers who buys these Bitcoins owns these Bitcoins. You just own the share to that pool of that Bitcoin. And why is this a problem? Because when you have Bitcoin ETF as a speculative instrument, it is open to market makers for people to manipulate the market. And more importantly, it is no longer decentralized because a large pool of Bitcoin is held by a small number of people, whereas everybody else in the scene is just holding on to shares of the Bitcoin pool. So when it comes to a voting or a consensus that is required for for Bitcoin to put forth an idea, all these various houses and people holding on to this Bitcoin pool will be the ones making the decision on your behalf. And there is no way to say that they will be fair and it's going to be a decision made for everybody. Chances are it's going to be made to benefit the very few who are in power. This is just like any other currency manipulation or market manipulation right now that you see in the market. So the idea that Satoshi put forth in the vision, the original vision that Bitcoin will be a peer-to-peer transaction away from any middleman or custodian, is now being ruined entirely because of Bitcoin ETF. So that's the reason why many of us who are really in Bitcoin right now don't want to see ETF happen, even if this would mean the promise of a quick rise of value in the short term. Because in the long term, the overall picture, it's very detrimental to the entire ecosystem. So when you dabble in Bitcoin ETF, what it really feels like is like you getting into the job on the very first day, wanting to do the best, hoping to climb up the ladder by doing the hard work. But really, what really happens is as time goes by, you end up doing the manual labor, there is no ladder to climb, and someone else on top is making off the money of your hard work. So now you know what ETF Bitcoin is about in a nutshell. Do you agree or disagree? Do you feel that this is not the way that Bitcoin should go and we should do something about it? Or you think, no, great, ETF is a good idea. I would like to hear from you guys what you think about that. Leave me something in the comments below. If you're angry about it, well, put that down as well. Up next on Fadip and FOMO news, well, we know how exchanges like to put up certain incentives to attract big traders to come onto their platform to trade so that they have the volume. Bitthumb did just that, and they are in some kind of small trouble for doing that. Why? In the latest incentive that they have, since August 25, they offer users 120% payback of the trading fees. Every day up to a limit of 1 billion won. That's about 900k USD. The current trading fees applied is about 0.15%. So if you count with the incentive involved, a user who is trading will get a payback of 0.18%. You get money for trading. If you're a sneaky trader, you could actually buy and trade among yourself, buy and sell against yourself. This is effectively called wash trading. And if you are doing that and it's 0.18% back and front, you make 0.36% just by trading against yourself. So the cool part about how you can really game the system is that if you were to have a daily trade, a fake daily trade of $250 million, you get a cool whooping payback of 1 billion won. So if you have $250 million lying around, well, I would encourage you to go to Bitthumb and take full advantage of their incentives. Over to Mediasizing the Regulators. Over in Naples, Italy, the mayor himself, Luigi, has put up a Facebook post to pledge to launch an autonomous municipal cryptocurrency that, in his own words, free the city from anti-Southern discrimination and unfair debt. The Facebook post itself is Italian, I think. It looks like Italian. But the gist is that Luigi is probably unsatisfied with the euro and the fiscal policies coming out of Rome. And he is using cryptocurrency to go against that. Now that is an awesome use case that I can get behind. Speaking of use case, in founders and use chains category, prominent modern artist Lincoln Townley, who Sir Michael Caine himself dubbed the next Andy Warhol, has sold his entire art collection for cryptocurrency. He basically dumped all his artwork to hold cryptocurrency instead. And some of this artwork can be found in celebrities' home like Sir Michael Caine, Sting, Ronaldinho, and Samuel L. motherfucking Jackson. So you would think that someone who's selling artwork to celebrities will be making money and being happy running galleries and being an artist. But no, he thinks that cryptocurrency is a better deal. And in a statement he made to local news, he said, "There is no two-way about it. The people who invest in Bitcoin are without doubt speculators. They are looking at something with more of a risk. But that's why I thought to myself, these are the sort of people who would be interested in purchasing my art as an extension of their investment portfolio. There's so many other ways to get sales with technology." Now, from just that point alone, I can tell you, he thinks art is as speculative and as airy-fairy as cryptocurrency, as with most artworks really are. It's very subjective. You see something shit on the wall, but someone else likes it and will pay a higher price for it. Boom! Now that shit painting that you dislike at first is worth something to somebody else. Like cryptocurrency, right? Very smart man, this Townley, in his latest collection called Behind the Mask, which will be featured at the Biennale di Venezia next spring. And trust us, we believe he'll be selling all his artwork for cryptocurrency next. And over to Singapore. Well, there seems to be a rumor that the Temasek investment arm has been looking into acquiring part of Bitmain's IPO. Well, Temasek has said that they have not spoken to any representative in Bitmain at all, and that the news reports involving the IPO and Temasek is false. Well, this is a relief because apparently there was to be a $560 million in USD funding promised by Temasek. And as we all know, lately Temasek have not been making a lot of good investment decisions. And by my own opinion, Bitmain is probably will be one of the worst. So good job that Temasek is not going to this. And well, not squandering taxpayers' money. In another round of good news, rather this is not so much a good news, but a feel-good news. Ethereum founder Vitalik Buterin, Microsoft researcher Glenn Whale, and Harvard economics professor Zoe Hidzik have co-authored a paper called, this is a mouthful, Liberal Radicalism, Formal Rules for a Society Neutral Among Communities. Anyway, the paper shares the problem of free riders. Free riders are people or businesses who profit from the under-provision of public goods. It also postulates that more people tend to benefit from public goods, the more will be under-provided. Other than Vitalik, you might think, how does this paper has anything to do with cryptocurrency at all? Well, basically the paper goes on to talk about the problems plaguing the cryptocurrency space as well. But for the moment, the author's focus is to address on the harmful incentives of funding blockchain projects. Ooh. So here's where the cryptocurrency re-envisioning applies from the paper. Currently, crypto companies rely largely on donations, contributions from their creators and ICOs. The paper also proposes a new financing method to allow self-organizing ecosystem of public goods. The financing method, which is written in the code, allow groups of people to allocate funds for the maintenance of public goods and services without being vulnerable to free riding problem. The mechanism described is similar in principle to quadratic voting, which is a form of stake-based voting mechanism championed by Vail in another book he wrote called Radical Market. So liberal radicalism expands on the same concept by giving weightage to how communities contribute to public goods such as software development, cryptocurrencies, and journalism. So the more participants contribute and show that they care about the particular issue, the more funding will be given to that tribe. So according to the authors, they hope that this paper would pave the way for a better financing model that would be dependent on the crowd wisdom, as well as aligning the financial vision that is in line with the ethos of cryptocurrency enthusiasts, rather than the current manipulative nature that we have been seeing of late. So, well, all is not lost in the cryptocurrency universe. As much as there have been a lot of bad players, there are heroes out there trying to champion the cause for good. Well, in time to come, we'll see how all this pans out, and I keep my fingers crossed that there'll be good news in the years to come. Well, that's all I have for you today. My name is Eugene Tay. You're watching Rock the Block Live, and I'll see you guys tomorrow on more Daily News.